Hi, welcome to Excel Tips GH. My name is John and I'll be your tutor for this course. In our previous lesson, we introduced ourselves to the bonus payment and then its tax implication, and then we even incorporated it into our payroll system. In today's lesson, we are going to delve into the treatment of overtime payments and know what the law says about overtime payments. Now, what to know about overtime payments. As per the Act, overtime rate is applicable to employees who are junior staff and their qualifying employment income including benefits and gains to be taxed in the year is not more than 18,000. In other words, it means that a junior employee or a junior staff is someone whose total cash emolument or gains from employment doesn't exceed 1,500 per month. Let me add it over here. So, what is the treatment going to be? Now, one, it says that if the overtime paid is not more than 50% of the employer's basic salary, the employer shall deduct 5% as overtime tax. However, if the overtime paid is more than 50% of the employee's monthly basic salary, the excess of the 50% is taxed at 10%. Let us solve an example to aid us in the calculation. So we have a dude who earns a basic salary of 1,200. So per scenario 1, in January he earned an overtime of 500 cedis, and 2, in February he earned an overtime of 650. Now we are going to use the Act to calculate the overtime tax he needs to pay. So solution: January, the basic salary is 1,200. Now let us see what 50% of the basic salary is going to be. 50% of salary is going to be 50% times 1,200, which will give us 600 cedis. Now we can see that the 500 overtime is less than 600. So the overtime tax is going to be 5% times the 500, which will give us 25 cedis. Now in February, basic salary is still 1,200, and 50% of salary is also equal to 600 as per the calculations over here. Now overtime in February is 650, which exceeds the 50% of the basic salary. So the excess is going to be 650 minus 600, giving us 50 cedis. So for February, his overtime tax is going to be 5% times 600 plus, let us put it in brackets, plus 10% times 50 cedis. So we are going to get 30 cedis as overtime tax. Let us solve another example. John earns a basic salary of 8,000. In January, he earned an overtime of, say, 400 cedis. Here the overtime tax is going to be 0. The reason being that a basic monthly salary of 8,000 does not qualify as a junior employee. So as we stated over here, as the law stated over here, since it exceeds 1,500, the 8,000 exceeds 1,500, it means that we are going to add the whole of this bonus to his total cash emolument, and then we are going to use the graduated rate to calculate for the income tax. Remember that in another scenario, assuming that for January, Edu, we are adding up for January, Edu was given allowance of, say, 200. Here the basic salary is, so in our calculation the basic salary is 1,200, but the total cash emolument is going to be 1,200 plus 200, so giving us 1,400. And then this is still less than 1,500, so he still qualifies. But assuming that in February, Edu was given an allowance of, say, 500, then here the basic salary becomes plus allowance of 500, giving us a total cash emolument of 1,200 plus 500, 1,700, and this exceeds the 1,500. So what will happen is that if this were so, then the overtime is not going to be taxed at the 5 and then the 10%, but it is going to be added to this total cash emolument and then use the graduated rate. Thank you for watching. Please share, subscribe and like so that this work can continue. Thank you for watching. Bye. Seeing you in our next lesson.